You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to watching the Financial Survival Network. I'm Kerry Lutz. Well, the market has been up and down, but it's still way below its peak. Is it going lower? Good question. Let's find out. And let's find out if energy is where it's at. Our good friend Dee Carter, DeeCarterFinancial.com is with us. Dee, great to have you back. So what is going on with this market today?
Thank you, Kerry. It's good to be back with you again. And the market, as you just mentioned, is kind of going crazy right now. It's up and down. It's everywhere. About the only sector that's done any good at all in the last several months consistently is the energy sector. And we see some things there that are potentially of value to our clientele. And we're talking about some perhaps local things. The main thing that I look for when I'm talking to clients about the market is trying to find things that produce income. We're looking for things that are paying good dividends, high dividends if possible, the highest we can possibly find, and something that they can invest in comfortably. Some of these stocks, by the way, in the energy sector, as you will know, Kerry, are pretty high per share. So you have to be kind of well-heeled to get into some of these sorts of situations. But if you can, the dividends are really worthwhile. I'll give you some examples if you'd like.
Yeah, please.
Devon Industry, for example. Devon has done, DEVON, has done quite well in the last 6 or 8 months. Their dividend last quarter was like 8.1%. Diamondback, which is by the way, Devon is out of Tulsa, Oklahoma. They have a lot of oil in West Texas. As you well know, the Permian Basin is the largest oil field country.
Yeah, they're frackers. Yeah,
they're frackers. That's exactly what they do. And their company has done exceptionally well as far as their dividends are concerned. Diamondback, which is a small drilling company and does some service work as well, paid a 9.1% dividend last quarter. So they're doing quite well. The one that I'm highest on is Osino Resources right here in Midland, Texas. They're one of the larger independents. Their dividend last time was 15%. So the dividends on those situations look very good for our clients that are looking for income. There are other things out there that can be found if you take a real sharp look at it. But right now, we're kind of staying with the energy sector, wondering what's going to take place in the fall. It's going to be really interesting to see what happens. We've had a decent quarter. It's not like it should have been, we think. I think the fourth quarter, depending on what happens with the Fed, could be, it's not as high as we thought it could be. I think it's going to be okay, but it's not going to be as high as we had anticipated that it might be. So that's kind of a come see, come saw thing. We go in and back out of it. And I don't know if we could have a decent first quarter based on what's going on right now, but it's not nearly what they would hoped it would be. I'm saying be careful, look for high dividends, look for things that are paying the dividends before you get involved.
All right. So here's the question, though. High dividend stocks, I agree with you, are great under certain circumstances, but that's based on the assumption that the companies are going to continue to pay high dividends.
Absolutely.
Obviously, life is uncertain. You don't know. But how do you determine, like a Devon, they haven't always been the most reliable paying dividends, have they?
No, they've been up and down across the board. In fact, that last dividend they paid was one of the highest ones they've paid in the last 2 or 3 years. So I think, though, that what we're seeing is that with the energy situation being kind of crazy like it is, we're still getting 85% of our energy in this country from petroleum products and from fossil fuels. So as long as we've got that situation going, and I think it's going to continue to be that way for the foreseeable future, the chances are these companies like that, the smaller companies, the smaller independents that do a good job of management, are going to be able to maintain their dividend levels at a higher consistently level, I think, over the next 6 months to a year.
Okay. And that might well be the case. What about Natgas? Natgas prices, they're really trading at decade highs. Even now, Natgas is close to $9 per MCF. It got up close to 10, pulled back, might be on a short-term sell signal right now. And that also brings out midstream
Sure.
pipelines and such.
Don't just survive, thrive. The Financial Survival Network.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has a tight share structure, and with its current treasury, it can self-fund the advancement of its gold discovery into at least 2022. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to osinoresources.com. That's osinoresources.com.
This is the Financial Survival Network. The information you need to thrive now more than ever.
It does, and natural gas situation is going to only improve as winter comes upon us. The thing about it is we're looking at a mild winter, according to the weather people in Europe, which could make a difference.
Right. The weatherman's always right, like the financial analysts out there,
exactly,
right?
Exactly. Right. We're always correct. But that's a good point. But if they do have a mild winter, it could certainly alleviate some of the problems that we're seeing with the situation right now. But natural gas, as you point out, it's doubled in value, MCFs, over the last year or two. So it's done exceptionally well. And that is the cleanest burning natural fuel that we've got. It's absolutely one of the best things we need to be going to. And in fact, in my estimation and the estimation of those people that run the oil companies, we need to be looking more toward natural gas than we do toward solar and all of the other types of energies, the wind energies and that sort of thing, that are not only they're unstable, they're not dependable in certain conditions.
Mm-hmm. That's very true. And I'm a big proponent of Natgas. It is the cleanest fuel out there certainly as far as hydrocarbon-based energy. Arguably, it's cleaner than certain other types. But the green initiative here doesn't make any differentiation between oil and natural gas. And you see what's happening in Europe now. So one of the reasons Natgas is so high in the US is because we're exporting 20% of it in the form of LNG to help make up the difference for Russia pulling out of Western Europe, their gas supplies. So that's part of it for sure. But Natgas now is much more important than it was in 1975 during our last energy crisis.
Oh, there's no question about that. Natural gas will be, and I think it's the gas of the future. It's the fuel of the future, the energy of the future for the foreseeable next 20 years. What the green people are trying to do is push something that we probably could put off or at least work toward for over a period of 20 to 25 years. And they're trying to do it all overnight. And that simply cannot be done. It simply cannot be done. When you're getting as much energy from the fossil fuel industry as 85% of what we're doing, you can't just turn off the spigot all at once and turn on the other spigots and make them work. They just don't work. We ran into that problem here in Texas 2 winters ago. We had our great ice storm, and we found our turbines were going down. The wind turbines were being frozen up. The solar fields were being iced over. And as a result, our energy grid nearly crashed because of it. So we've simply got to maintain where we are and continue to work in that direction, which makes it good for the investor to be investing in that energy area, I think, over the next 15 to 20 years.
I think you're right, Dee, for sure. Besides energy, is there any other sector you see as a positive?
If the inflation situation were to ease, and we're waiting to see what happens with the inflation reports coming out this week, but if the inflation situation were to ease, consumer purchases will be better because people have to buy the things they need, regardless of what the inflation figures are. So consumer situations will probably be level, if not somewhat better, in the fourth quarter than they were in the third. The other sectors are really, and the financials are down, the healthcare situations are down. All the other sectors are really in trouble right now. So in fact, there are people saying that the S&P 500 could have as much as a 20% decrease in the fourth quarter of this year. So when those people come out, you've got to take a look at that and evaluate their judgment and see what it's going. But you need to keep that in the back of your mind in your investing situation.
Hey, well, it'll be interesting. I think we'll know more about that when we watch the Dow Jones.
Yeah.
versus the S&P, because the Dow Jones is the more defensive index and more dividend paying, and pretty much able, due to the size of the companies, able to withstand financial turmoil much better than the smaller cap investment.
No question. It's the bellwether that pulls the other groups with them as they go. And you have to watch those things. But when you realize you're looking at 30 stocks instead of 500, you've got to kind of figure across the board. And a lot of our clients are looking at more income situations, which is more prevalent in some of the S&P situations.
So true. Well, we appreciate you coming on, Dee. Got a question for Dee? Shoot me an email, kl@kerrylutz.com. We'll get you an answer quick. Make sure you go over to the site financialsurvivalnetwork.com, and you'll find the link to Dee Carter Financial in the show notes of this interview, and sign up for your free newsletter while you're at it. Dee, always a pleasure. Thanks so much for stopping by.
I appreciate it, Kerry. Look forward to seeing you again soon.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.